Hi everyone, it's Joyce from Tax Duckers. Today I'll give you an overview of the various working from home expenses, what you can and can't claim, the ATO approved methods for working out how much you can claim, and a few tips on how to work out which method is best for you so you can maximize your tax refund. A bit of background about myself before we begin. I started working from home from around early April on a full-time basis. I'm a tax consultant, so my job mostly consists of sitting in front of a laptop in my home office slash study slash kids playroom slash guest room. So let's jump right in. Here's a list of things you can usually claim to the extent that you use them for work. Your phone bills, internet bills, electricity and gas, but only if you have a dedicated work area, which means you have a study or a study nook, but certainly not one side of the dining table. Home office furniture depreciation, such as tables and chairs, your electronic devices depreciation, such as mobile phones, laptops, tablets, computers, etc. And just remember that anything costing less than $300 can be claimed as an outright deduction straight away rather than depreciated. Stationery such as notepads and pens, computer consumables such as printer ink, cleaning services, and finally, occupancy expenses. Occupancy expenses such as rent or rates and taxes can only be claimed if you are self-employed or where home is your workplace and you don't work anywhere else. Moving on to the things that you can't claim from working from home, and unfortunately, coffee is not one of them. Neither is your coffee machine, nor any snacks that you purchase to enable yourself to work from home. How about the $790 Mont Blanc pen? Very unlikely, I would say. Childcare expenses, car expenses from driving to the office. Just because it's COVID doesn't mean that suddenly these things become deductible. And finally, stuff that work reimbursed you or paid for you is also not deductible. All right, so now we know what we can claim and what we can't claim. The tricky bit actually is working out how much we can actually claim. Some things are easy to work out and others are a lot harder, especially electricity and occupancy expenses, which can be quite a pain in the bum. Thankfully, the ATO has introduced a couple of shortcut methods. So let's go through the different methods that are available to work out how much you can claim. Basically, there are three ways of working out how much you can claim, depending on your circumstances. These methods are the shortcut method, the fixed rate method, and finally, the actual cost method. Let's go through each of them in more detail. The shortcut method. This method allows you to claim 80 cents for every hour you work without any receipts. This includes everything from electricity, gas, phone, internet, including depreciation. This means that if you use this method, you won't be allowed to claim anything else from working from home. And it's only limited to 4 months, starting from 1 March 2020 to 30 June 2020. This would likely fit many of us who started working from home around March or April due to COVID-19, but of course it will not suit those of us who have already been working from home previously. Under this method, all you need to do is work out the number of hours that you've worked times 80 cents to work out the exact amount that you can claim in your tax return. The next method is called the fixed rate method. It allows you to claim 52 cents for every hour you worked, but only in relation to the depreciation of home office furniture and furnishings, electricity and gas, and the cost of repairs to your home office equipment. No receipts are required for these expenses, but this method doesn't include the following, so you need to separately calculate the work-related use for your phone expenses, internet expenses, computer consumables and stationery, and depreciation of your electronic devices. This method will be good for you if you have worked from home for more than the last 4 months of the income year, and it takes the hard work away from working out the electricity and gas amounts, which are usually the most annoying and time-consuming expenses to claim. Finally, The last method is called the actual cost method. As its name suggests, you can claim the expenses, but you must have receipts for everything you claim. So this includes all the items that we've gone through previously. This method is for the real number crunchers. I go into a lot more detail in a separate video on how to actually use this method, but for this overview video, I'll merely focus on some factors to help you work out whether it is suitable for you. So, this method would suit you if, number one, you worked from home for more than 4 months, which means you can't use the shortcut method for the time you spent working from home before 1 March 2020. Number two, you have a lot of work equipment. Perhaps you're in IT and you need to have floor computer screens at home, which means the depreciation of your home office equipment or your electronic devices may be higher than the fixed rate method. Number three, work does not reimburse you for your home office expenses. For example, you are not provided with a work phone and you're not reimbursed for any work calls made on your personal phone. This means that you have lots of expenses to claim in your own tax return, and the shortcut method of 80 cents for every hour, which is based on an average person's claim, might be too low for you. Whereas for me, work pays for my mobile, so I can't claim anything under the actual method for my mobile. So perhaps the shortcut method might work better for me. Number four, you have strong attention to detail and have endless patience. For example, when was the last time you checked your electricity or gas bill? To claim these expenses under the actual method, you need to actually pull out these bills and work out how many cents per kilowatt your electricity costs. Then you need to work out how many kilowatts your laptop, for instance, is using. If all this sounds like you, then this method could definitely work for you and give you a higher tax deduction compared to the other two methods. For me, however, having looked at the three methods, I decided that the actual method is definitely not for me. Despite being a tax consultant, believe it or not, I have zero patience for calculations. The shortcut method sounded like it could work for me, but I also thought it was worth exploring the fixed rate method in case it got me a higher tax deduction. You can check out my next video on how I worked out which method gave me a higher tax deduction. So, that's the overview of working from home expenses and how much you can claim in your tax return. Thanks for watching.